Thanks very much for joining us today for the Infrastructure Summit, looking at transport and logistics. So we'll be picking up both the sort of future trends, the investment outlook, but also that key crossover between infrastructure as well as the real estate side when we're looking at logistics as an example. Super panel here today. We have Tobias Kastner, who's Head of Research for Garber Industrial Real Estate. We have David Pedler, who's the Director of Energy and Infrastructure Deals at PwC, and Ben Segelman, who's Head of Capital Markets for DHL Supply Chain. And last but not least, Tanya Soneva, who's a Senior Director for Global Infrastructure Research at CBRE Investment Management. So really interesting mix of different perspectives, both from the infrastructure side, but also from that logistics side, and also looking at transportation as well. Let's just maybe start with a quick question to you, David. A lot of focus on transport and infrastructure investment markets at the moment. There's the Build Back Better discussion. There's a lot of focus in the US on significant investment into transport infrastructure. So I suppose, how do you see that in terms of the market at the moment? What's your sense of where we are in the market?
Fine. So I mean, I think part of your question was whether the government initiatives, be that Build Back Better or those announced in the US, were going to drive significant new investment. And I think, that infrastructure, the need for the transportation infrastructure and significant investment into it has always, or has been there for a long time. And the infrastructure gap and how to solve it has for a long time been a core focus. So I think those initiatives are really positive, and they should provide extra impetus to investing in transportation infrastructure. But I think, notwithstanding that, the appetite overall remains really strong across all of the segments. Now, and as Tanya very rightly pointed out, it sort of came off its level, but overall we've still seen some really significant deals across all of the sub-segments, certainly over the last 15 to 18 months, including ports, aviation, rail, and ports, toll roads, rail, and to some extent aviation, with the sort of less deals, but some quite significant and material ones.
And it would be good also to get your perspective, I think, Tanya, on the investment side. I suppose, what are you seeing in terms of the key influences on the market?
Okay, so yeah, definitely. I think again that we can't really downplay the impact of the pandemic. There was a significant dip in investment flows in transport infrastructure last year. I think the investors woke up to the fact that there is a demand risk in this sector, because we haven't seen that for a decade. Aviation was going up and up and up, and like last year, I think there was a bit of a realization that transport infrastructure in many instances comes with volume exposure. Again, I think that's actually positive from where we are today. There's a combination of short-term and long-term factors, I think, which will actually drive the demand for transport infrastructure. And first, on the short term, I think I mentioned economic recovery, and this is a bit of a more kind of cyclical play. So we will see more volume, we will see more traffic as a result of it. And then on the long term, we put together in the mix population growth, we put the kind of rising incomes overall, as well as decarbonization. I'm sure we'll speak about that, but the kind of the need to actually move to those net zero pledges will affect the transport infrastructure a lot. In terms of the changes or the shifts, I think it's not like we're seeing that many shifts. I kind of think that we're seeing accelerated trends. So some of the things that, for instance, probably predated the pandemic, we just saw that, they were validated. And one of the things that I think about, for instance, is people's preference to use cars. Right, like I think it was there before, but now it's even more so, because I think people feel a lot more comfortable to be in their personal vehicle, and that's why we saw the strong recovery in toll road traffic, for instance, compared to other modes of public transport. So probably that's one of the kind of the topics that come to my mind.
Okay, interesting. And it would be good just to pick up with you, Tobias, if we can. From the logistics point of view, obviously logistics has been one of the sort of major kind of success elements of this. So I suppose, where do you see us at the moment, particularly thinking, I suppose, at the real estate side, and I suppose, how are you seeing some of these future trends beginning to play in from the infrastructure side into the logistics side?
I think the main topics here is the move from to the electrical vehicle, even for transportation, or the use of hydrogen, and the infrastructure used for the trucks and lorries to get from the different distribution center, or from connecting the consumers with the producers. So we're about to enter a very exciting stage where we have to think about, okay, what technology we are focusing on. We have, for example, in Germany, we're experimenting with electrical utilization of over the motorways, for example. We are experimenting with hydrogen, with electrical vehicle, autonomous driving. So everything is very exciting and new, and we have to see which technology is winning on a global scale. And for example, when we think about the charging process, right now everyone is talking about, okay, we need to build up an infrastructure for charging the vehicles and lorries, also as for the public transportation sector, the individual cars. But for example, looking to other parts of the world, they are experimenting not with charging, but with changing the batteries. So if everyone on the world is changing the batteries and not charging it, then we don't need to build up such a huge infrastructure. We can, because in our point of view, the electrical grids, for example, are not, they are at the moment already at the fringe of, for example, if we want to build up a data center, we often have to face the situations that we don't have the currents and the networks and the grids. So if everyone is driving electrical, then we are facing many problems. That's one reason. So it's a very interesting stage we are entering right now.
Ben, I wanted to pick up with you because obviously logistics, freight in general, I guess over the past 12, 18, 20 months of the pandemic has been one of the key elements that everybody's been talking about. But I suppose in terms of the transportation side, from your point of view, what are you seeing, and I suppose how is that impacting on your decisions around real estate as well for logistics?
Yeah, I mean, DPDHL is the world's largest postal and logistics group, and as part of that process, transportation is key. Whether it's aviation, whether it's transport by train, ship, van, etc. All of it is essential for our business and for our customers' needs to deliver product. And I think, as Tanya mentioned, that over the sort of COVID pandemic, there's been an acceleration in everybody's understanding of a need for change. And here at DHL, we've brought forward our targets, our ambitions to improve, our net output. And ultimately, what that's resulted in is a target for a net zero emissions by 2050. But in order for us to get there, we've recently announced that we're also investing 7 billion euros in reducing our greenhouse gas emissions to under, I think it's 30 million tons by 2030. And that in itself will see a huge change in how we operate. We're moving towards sustainable aviation. So with an aim of using more sort of better aviation fuels, electrifying 60% of our last mile fleet by 2030 by building carbon neutral buildings, and also, investing in more green product portfolio. Unfortunately, it's not something we can solve immediately, but it's something that we're promoting and trying to emphasize as our customers are ultimately demanding it. Whether it's one of our large multinational corporations that we work for, or whether it's the people at home. We all want a better, greener future. But it's, this only happens with investment from all groups like ours and others into trying to get there.
And Ben, what does that mean in terms of, does that mean that you're looking, obviously electrified vehicles, that, electrification, those kinds of things, but what does that also mean in terms of the types of transportation you're looking at? Does it mean that you're favouring more rail over road, trying to look at different ways in terms of air transportation? Because obviously it's a huge carbon footprint for a company like DHL.
Yeah, I'm not sure it's going to see a seismic shift in how we're moving our goods, at least not in the near term. But I think it's certainly making us think more about those routes that we are taking. I know that we've invested recently in a specific technology that helps our drivers effectively find a greener, quicker, faster route to the end destination. And it's with this type of change in technology that gives us this foresight that then I think over time we can probably start to think about reducing down the reliance on aviation, for example, or changing the way we use aviation to then improve the sustainability objectives. But it's such a huge undertaking. It's, the amount of goods that have to be moved by air, for example. We've got one of the largest fleets, I think, globally, outside of the sort of, everyday passengers. We need that solution to be able to ultimately deliver for our customers. But there are moves to, as I said before, to improve the aviation fuels that we use, and also, think more about alternatives. We invested recently in, I think it was 8 entirely electric aeroplanes for our express business, which is 8 airplanes doesn't sound like a lot, but it's the start of that I guess sort of process change that I think we'll probably see more technology come through as well that will offer alternative solutions.
Okay, that's interesting. And just on that kind of types of transportation, are you expecting there to be remain a focus on road, or are you beginning to think about using more, whether it's rivers or canals or rail, or what's your sense of where you're heading as a company?
Yeah, well, look, the road is probably one of the most in demand solutions to be able to deliver to our customers. But we are looking at alternatives. We invested recently as well in some riverboats here in London that can take parcels for our express business from one side of London to the other, in a speed that ultimately cannot be achieved on the London streets with all the congestion, etc., that we're up against. But it's interesting. There's been a lot of press recently about how there's a driver shortage, and this is a global phenomenon.
Ben will be coming back to us, I'm sure, in a second. But let's pick up a little bit with you, David. In terms of the sort of discussion around, and I know this isn't going to be focused on new energy, but I know that you are also looking at new energy. Do you think the winners out of this is going to be electrification, or do you think it's going to be hydrogen as a different kind of fuel? And because that would obviously have, I guess, an effect on the logistics side, the real estate side, the infrastructure side as well.
Yeah, look. I think long term it will probably need to be both. I think simplifying it, near term the electric solutions will be the easier to implement, and I think again maybe looking at the subsectors, I think sort of rail and road transport are ahead of the curve of certainly aviation and to some extent shipping, because the development cycle of the electric solutions for road transport and for rail transport are much better established. There's significant investment needed as well, but the solutions are perhaps further advanced. Whereas in aviation, and really interesting to hear what Ben was saying there. You know, obviously it has a long life cycle in terms of the life of a plane, and so I think, you know, near term, I think as Ben was mentioning, there's things like sustainable aviation fuel that will really help without a lot of investment, the aviation industry overall reduce its carbon emissions. But then longer term, I think there will need to be, and we're certainly expecting a huge amount of investment. And I know the UK government's got the sort of Fly Zero initiative, that a number of, looking for industry-wide solutions, but to look at hydrogen and other solutions to sort of decarbonize aviation into the medium and long term. So I think overall, I think there'll need to ultimately probably be a combination of both. I can't remember if it was Tobias or Ben was saying, electrification. If everything went electric, there'd also need to be an incredible level of investment into the electricity networks and transmission and generation, and balancing that with, I guess, moving towards more flexible generation from renewable sources and green sources. There's a lot of complexity there. So I think all sources of decarbonisation will ultimately require investment and will form part of the solution in transportation infrastructure.
Yeah, and maybe just picking up on that point, Tobias. I mean, obviously, we've been seeing a lot of solar energy being used in terms of rooftops and those kinds of things in the logistics space. How much are you planning, I suppose, for electrification of vehicles? Because then there's obviously going to need to be charging points there and those kinds of things, at the logistics facilities. So how much of that is in your thoughts going forward on the development side, but also, I suppose, on the asset management side and putting in capital expenditure to make that possible?
Well, in our company, we have a lot of roof space possible for photovoltaics, of course, and we're trying to build up every square meter possible. But then again, it's very difficult because on the financial side, insurance side, and there are many obstacles, and it's no technical issues, and it's not about what we want to do. We would like to build up every square meter with photovoltaics, but the regulation is here a problem, especially in Germany. So there needs to be a shift of mind to get this really going. In terms of what our tenants need, of course, we're together with everything it's regarding to our ESG strategy, we have to think of new property types, which of course is suited for if the tenant needs it, that the tenant can charge their vehicles, of course. And so these sorts obviously go into everything from our prototype, as well as when we think of our stock. But it heavily depends on what our customer needs. And up to now, the share of tenants who really use electrical vehicles for transportation is rather low. So I think this will be a very huge topic for the future. And coming back to what you earlier said, are we seeing a shift to train transportation, for example? Well, I think this is that you have to define the scope. For example, if you have a global view, then I think it is possible that in the mid to longer term, a larger share of goods will be transported by train. For example, very well-known example is the Silk Road, but there are other initiatives on the way, despite all the political discussion which comes along it. But what we saw this year, when the Suez Canal was blocked, there was a heavy distortion of flows of goods. So we need to think of alternatives. When we are focusing down on, for example, Europe or Germany, then we see a total different situation, because since decades, the political agenda was about how do we get to the freight volumes onto train or canals, etc. And we are seeing here not very when we analyze the share of freight transported on the different infrastructures, we don't see a very huge shift to train transport or by river. And you can see it year by year that the transportation on goods by road networks is increasing. And for example, e-commerce and everything which comes along with it will trigger it once more. So I think it would be nice to get to transport everything by train, for example, but right now we are sharing the tracks with personal or public transport, so the trains can mostly drive at night. Then again, it's very being at risk. For example, if there's a landslide, for example, then the train track is blocked or destroyed for several weeks to months before they can be used again. If something similar is happening on the road network, you can drive around, you can reroute. So I think because all of this, the real question is how can we reduce the congestions on the street? Can we reduce noise or mainly the carbon footprint of the transportation? And we see here what we already discussed, electrical vehicles, and together with hydrogen, especially if we are able to produce green hydrogen in a sufficient amount. Together with autonomous driving. I think if it was already mentioned, we don't have the people to drive all the trucks. And of course, they need sleep, they need rest, and often there is a lack of parking space or amenities for all those people driving the trucks. But if you have a larger share of autonomous driving vehicles who can drive at night, who can reduce the congestions on the road network, this will, I think, be a real game changer for the future. Could be.
Okay, good. Thanks, Tobias, for that. Ben, welcome back. No problem at all. Interesting question actually that came in, which was from Mikhail. So thank you for that, Mikhail. Which is, do drones and zeppelins fit in somewhere as a realistic alternative? I mean, it's interesting that you mentioned there electric planes, those kinds of things. So, and obviously discussion around drones as a delivery thing has been happening for the last, for last 5 years at least, but not much actually happening. So, well, I suppose, what are you looking at? Are these things a likely addition to what DHL are doing? Is that where we see the future to a certain degree?
Yeah, I mean, look, we've invested in the technology. We are still looking at the technology. It's very nascent in a lot of ways, and there's many groups, startups that are looking at this industry as a solution for the future. I think it's certainly something that we will continue to monitor and to engage in, but it's very difficult to have all of the authorizations, all of the required licenses in place for this technology to actually be installed in a mass situation. I think we certainly use drones less so for delivery, but for security purposes in some countries, where they will provide monitoring of our facilities. But I think the technology is coming up at a rate of knots, and I think there is certainly scope for this in the future. We're not there on a wide scale basis yet, but I think probably in the next sort of 10 to 20 years, we'll start seeing this integrated into a lot more of the supply chain.
Okay, good. And Tanya, from your point of view, is there, I mean, if we've got electrification of vehicles coming, that means you're going to need a huge infrastructure in terms of charging facilities and those kinds of things. And so do you see that as a big opportunity at the moment? Where do you think we are? Is that something that investors are particularly looking at?
Yeah, and again, I think that it's a journey, and for us, like I think we're probably still at the beginning of this journey when it comes to electrification. Obviously, like electric vehicles, we had a massive take up, right? Massive meaning that you start from a very low base, but right now there is consumer demand, right? In some European countries, people are willing to buy electric cars. Like there is obviously a huge improvement in the technology and batteries, etc. But there is demand there. I think that's what matters. But in order for us to reach this kind of very ambitious electrification goals, we need an adequate infrastructure. We need charging that's reliable. I think it needs to be convenient. It needs to be like at the right place and at the right time, and that will require a lot more kind of charging station. And who's going to pay for this investment? How is this investment going to happen? I think it's still a bit of fuzzy question. And I'd say Europe is really kind of leading the way in terms of charging infrastructure. I mean, in the US, it's a lot less kind of developed. And in Europe, the way and why we are ahead of the game, I think it's really because you have some of the state-owned utilities. You have integrated companies which actually can underwrite some of these investments. There is a lot of technology risk in them. But if you want to have private capital, I'd say you really need to have a business model that works. I mean, it needs to be a good sort of cooperation between the government, providing be it financial incentives, stimulus, but also providing the right things like the connection to the grid, like permits, the use of real estate, etc. So overall, I kind of think that we are at the beginning of the journey, and if we are to be successful and to really have private capital, the business models would need to be a long more, like to really give you predictable and longer term cash flows. That's what infrastructure investors are really after.
And thanks, Tanya. And David, is there a concern around this? I mean, so for example, this is purely my experience here with taxi drivers of late in London who will tell you, oh yeah, no, don't bother using those chargers because actually you have to wait there for, an hour and a half. Only choose these ones. They're still quite slow, but better. And as more taxis are beginning to be electrified, I'm increasingly hearing this much more. So is there a danger also of, like we've got on the real estate side, we've got stranded assets in some ways. Is there a danger of this because of the rate of, I suppose, change that's happening at the moment, that somebody may invest in some kind of EV charging infrastructure, but then that's suddenly outdated and replaced by something else? Is there a risk around this?
Look. I think there certainly is a risk, albeit I think ultimately there's, as Tanya rightly points out, there's overall a huge need for this infrastructure. But so fundamentally, the emergence of clear business models around the en route market, i.e., sort of highway, motorway service stations, your destination charging at home, how people will consume the energy at those sites and what their usage models will be, how much they'll pay, whether they'll be willing to pay. I think that's probably where some of the uncertainty that Tanya's alluding to is focused at the moment in terms of what will or won't enable private capital. I think we are seeing capital go into these businesses. The check size is relatively small, but for infrastructure investors, it's certainly a question of getting comfort, as Tanya's saying here, around the long-term business model, whether the usage model is clear, and I guess the risk that their assets will become stranded, or that there's a clear sort of repayment cycle by which time they can therefore refresh them.
That's interesting. And Ben, I mean, Tanya mentioned there as well that Europe was kind of ahead of the game in some ways on this. What are you seeing from your perspective? Are there kind of differences? DHL obviously very global. So is there a sort of overall view in terms of the company, or are there differences between different areas? Is Europe kind of leading the way? What's your sense of that?
Yeah, I think Europe is certainly. There's a very strong drive from the development community, from the investors behind those developers. But there's also the customers, the tenants, the groups like DHL, whose own customers are requiring this type of technology and infrastructure to be put in place. But I think the issue comes when you think about that cost. Obviously, as we install more technology into our buildings or into the transport network, so there is an additional cost. The cost, first of all, for the installation, and then there's also the cost for the use. And ultimately, when this comes down to the tenant, there are those groups, and like DHL, our customers who require it, they accept part of that cost. But there are other groups who are not quite the same size, scale as we are, that then I think will struggle with that additional cost or that transition to it. I think in time, we all expect there to be potentially some form of tax that will, ultimately dictate which way we have to invest and use our real estate or transport network. But as we have right now the choice to install this technology into our buildings or infrastructure, there will be those who choose not to do this because ultimately it puts off their ability to create an income through the investment that they make. So I think it's, there is this transition. It's going to be difficult for investors and tenants alike to have to sort of think about the computations as to how this evolves. But certainly, groups like DHL and a lot of the investor and developer world out there are certainly bringing this forward. And as we are looking at our own pipeline at DHL and building out our warehouses, we're investing substantially in it. And our customers are looking for these innovative solutions that we're providing. And so we are seeing the benefits of that. I think it's got a long way to go though in our markets.
Okay, that's interesting. And Tanya, maybe just coming to you on this. I mean, so how do you see that? Because obviously there's this transformation that needs to take place. Ben's there mentioned that it's a question of also who pays for that, and maybe that's easier for a larger group like DHL. But I'm guessing, for the investors, are the investors happy to pay for that? Is there an expectation of that they will therefore get that money back in terms of rental growth? What's your sense of that?
I think definitely it's going to be a journey. I think that there's, like everyone here says on the panel, we need to keep our options open, meaning that, there's going to be different alternatives and you cannot just bet on one technology. So really, when you invest, you need to kind of keep an eye on what's out there and what's developing and at what speed. Because again, if you look at power generation, for instance, we have a decade in investing in renewables. We have mature established technologies like solar and wind and, like we actually know, like even the costs are falling there, but you have an established technology. And in transport infrastructure, as we're in the beginning of this journey, like we really would see what kind of emerges, be it electrification, be it the use of hydrogen. That's now at a smaller scale, but it may become a solution, especially in some instances. So the reason why I'm saying that is that for infrastructure investors, obviously, it's very important to make sure that whatever they invest in, again, you don't have the stranded risk. When you underwrite, what kind of technology actually emerges, and if you're not on the right side, you have a certain protection against that. So you really invest in countries where the governments or through some other ways you have a certain protection. You don't want to have your capital just stranded for large periods of time. I'd probably kind of say that with some of these investments, they're small scale, they're interesting. But again, we neither have the established business models or we also have quite a lot of technology risk, hence, they're not as particularly attractive today. But the market is changing, right? The market is changing.
Good. And Tobias, from your perspective, I mean, Ben mentioned there that this is an element as well that's the investors and the developers are having pressure on in terms of that ESG side and creating those innovations really. And in terms of how that's paid for, do you expect to take a hit on that in terms of being able to get either tenants there for longer, or I suppose how are you expecting that to be paid for?
if we look into the rent levels we're seeing right now, they are rising, but not because of the technological improvements or the installations, because more or less because of the pressure in general on the what is possible because of the limited space available. But of course, like already said, we have to distinguish between the very large companies, the major brands, the one listed in the top 500 and so on. They have their own ESG agenda and following their path with decarbonization, etc. And on the other hand, we, especially in Germany, we have a very huge share of tenants from the smaller and mid-size companies who don't have such a pace, and they have still trouble to accepting certain demands. And but it's getting better. We see improvement, and we are about to implement more and more ESG lease contracts for our tenants, which include several aspects of all of ESG, including the sustainability and decarbonization strategy, of course. And it's getting better, but those both groups are having a different pace, and so we have to take care of both of them. And yes, that's the situation we have to adapt to.
Okay, good. I wanted to pick up a little bit in terms of, I suppose, the sectors within transportation as well. David and Tanja, maybe let's start with you, David. But obviously, there have been differences between, rail, road, all of those elements. Where do you see those in terms of that segmentation of the market? I mean, for example, have we been seeing deals in airport infrastructure, those kinds of things, or are investors more wary of that? What deals have you been seeing going through? I suppose is the transaction backing up what some of the trends?
Yeah, no, absolutely. Well, why don't I start off? So, I think as we alluded to at the top, there certainly has continued to be an okay volume of transport infrastructure transactions over the last 15 to 18 months. Notwithstanding it came off its sort of previous highs, given as Tanja alluded to earlier, the impact of demand risk was probably its most prominent that it had ever been. I know we certainly, when we looked at deals when I've worked on airport deals in the past, we'd always look at things like the volcanic ash cloud and the global financial crisis and what impact that had on passenger levels, and more, definitely had an impact, but the airports were fairly resilient. Clearly last year we saw airport passenger volumes, dropping right off a cliff, really. So I think probably the highest level of hesitance to invest is in the aviation sector. I think we've certainly seen, we do a lot of work of all sorts with the airports, but we've certainly seen their sort of the rebound expectations in terms of how quickly passenger aviation or passenger volumes at least will return to 2019 levels, progressively pushing to the right. Probably in the early days of March, April 2020, it was by summer 2021 we'll be back to last year's levels. Clearly that hasn't been the case. So look, I think we've seen as a lot of investment as confidence has recovered. There's certainly been a lot of transaction activity, or an increase in transaction activity in rail, certainly in toll roads, with some really big deals that have happened there. Shipping and ports has seen some good transaction activity, perhaps slightly less than the other sectors, and then aviation sort of in last. But as Tanja alluded to, you still then see a huge public to private in the tens of billions for Sydney Airport. So clearly, for the right assets, there is investor confidence for investors to put their cash behind the aviation sector.
Okay, good. And Tanja, feel free to pick up any of those points up. But I also just wanted to pick up from your you a sense of, I suppose, how the market is seen from you across Europe? So, UK versus Germany versus France versus Nordics versus CE. I suppose, how do you see those different markets? Are you seeing them broadly the same, or are there particular, different opportunities in each of those markets?
Yeah, and I think probably that's the beauty of infrastructure. It's like, there's so much like divergence in terms of for differences between the different countries, different business models, as well as the different modes of transport. So you really kind of have to look at it in a very detailed fashion. And at first I'll start and say probably just so that people don't kind of lose the point. I think there were actually pockets of transportation infrastructure which weren't so much impacted by the pandemic. There were resilience in, for instance, sectors like ports. Shipping actually came out really well last year in terms of volumes, and ports, there was just a quarterly kind of impact in terms of the activity. But overall, there were subsectors which proved to be relatively stable even in such a significant crisis. I also say that in terms of the outlook, I definitely agree with David that aviation remains the most let's say, cautious in terms of the outlook. And it's not aviation. I think I would say it's actually anything that has a cross-border aspect to it, like anything that's international and where you need to cross a border, and you have the news today of the Omicron variant coming in and people saying, okay, well, I'm actually going to put off my bookings and I'm not going to travel because of changing restrictions, quarantines, the risk really is in terms of crossing borders, be it even if you need to cross a bridge between the US and Canada, let's say. So I think the cross-border travel is going to remain impacted for a few more years at least. In terms of the kind of regional aspect, I'd say that one thing we noticed that the recovery was very similar by the different segments in the different countries, but then the restrictions were not, meaning that if you have a global business or business that operates across different countries, you're actually in a better position because the restrictions were not synchronized. Like for instance, we were out of the restrictions in Europe, then in Australia there were restrictions, transurban traffic actually kind of fell down and for a few months. So definitely it's not so much, I think, the market or the country, but it is the level of the stringency of restrictions on mobility that defines or determines traffic volumes overall. I probably say that at the moment where we are, most of the countries are recovering at the same speed. In toll roads, we're seeing levels coming up to pre-pandemic levels. I think that probably is a trend across the globe, while, like in aviation, you have regions with a lot of domestic travel, which is going relatively okay, but you have also regions which have a lot of international, like Europe, that's going to remain in the doldrums, I think, for a few more years.
Okay, good. Ben, I just wanted to pick up with you. I mean, there's been a discussion a little bit around changing focus between rail, road, air freight, and obviously quite a small difference can make quite a big difference to a company like DHL in terms of, I suppose, the real estate side that you're then looking for. So just be interesting to get a sense of, are there any changing views in terms of the positioning, or, are you more interested in being closer to rail freight areas, for example? Is that something that you're actively looking at either as part of an ESG agenda or a kind of more broad mobility kind of transportation one? Just interesting to see what's driving the placement, I suppose, of the real estate side for you.
Yeah. Well, I mean, fundamentally, from a real estate development point of view and logistics, I think we've always been told locate on the transportation hubs. And, what logistics operators like DHL want is a reduction in the cost of their transportation fleet, whatever that is, reduce that cost. But I think at the moment, and again, sort of going back to all of the press that is globally, one of the top sort of items at the moment, it is the lack of labor. And for the first time, I think we've sort of recognized at DHL that actually it may be worthwhile increasing the potential cost of the transportation routes to be located closer to the labor resources. Because ultimately, despite all the automation we're putting in, the potential for driverless cars, etc., we need people to ultimately facilitate the running of our operations. And right now, as it's so difficult to fulfill that, this is becoming more and more a key driver of what we do. I mean, we employ 500,000 people globally across DPDHL, and it's incredibly difficult to ensure that you can have that staff retention and ability to ensure that all of your facilities are properly resourced. So I think that this is becoming more recognized across the development industry as a whole. I'm sure it raises questions with investors sometimes when they say, well, hold on, why have you not built this inside of the Golden Triangle in the UK? Or why have you not built this, in a capital city across Europe? There are reasons, and those reasons more often than not are fueled by the understanding of the operations inside the warehouse, rather than just what historically we've been told creates a good potential for the future. So interesting.
No, that's really interesting. And Tobias, is this something that you're kind of seeing from the developer point of view as well there, the investor side? I guess that means having to take a slightly more flexible approach and looking forward to where you're expecting to see the demand, and that may be closer to areas where there is employment. Employees, rather.
It's totally true. It's even not very new to us, because we see it since a few years that a workforce as well as available plots of land are getting scarcer in the top A markets. So we see since several quarters, maybe 1 or 2 years, even it started before the pandemic, even a shift to second-tier locations, that many companies are willing to locate further away from where they want to be. Of course, it's a discussion about same day, same hour delivery, last mile or the very last mile. It was centralized on being as close to the consumer as possible. But I think Tanja already said, the demographic change on a global scale is shifting towards the cities. So the struggle for the plots of lands and it's getting more intense. And so on a logistics point of view, because they often use very large plots of lands, if you don't think of urban logistics, but they tend to move since a few years more away from the metropolitan area. So this is not a very new topic for us, and so we're focusing on those sites as well. But for example, finance on the financing side, it's getting more and more difficult, because many banks say, oh, we don't know if we want to finance such a location, and we have to explain to them still why this is taking place, a change in the location patterns. And what Ben said, it's about the workforce, it's about the availability of plots of lands, and of course even if some companies are willing to invest more or are taking more costs for the transportation or the total cost, many companies still look on rent levels and yield levels for their investors, for example, on the investment side. And the top A cities are still the sites with the highest rents and lowest yields. So even from an investor's point of view, we're focusing more and more on second-tier locations.
Okay, interesting. Thank you. There's only around a couple of minutes left now, so I just wanted to pick up on, I suppose, the opportunities side of the discussion. So I suppose maybe starting with you, Ben, in terms of, I guess, where do we see this going forward, and what does that mean, do you think, in terms of the opportunities side?
Well, I mean, look, technology has been so disruptive to this industry over the last 2 decades. There's been so much change, and I think that change is being amplified almost on a daily basis at the moment. And I think, as we've just sort of explained that, I think one of the keys to this is educating investors, developers, industries as to that need to adapt to the change and what that means for us going forward. I think nobody can see what this industry will look like in 20 years, but understanding, how we can change to make better investments today and how that can be sustained into the future, I think is key for us. And I think probably, for every stakeholder looking at logistics real estate going forward, it's understanding and adapting.
Great, thanks very much, Ben. David, coming to you, what's your kind of key takeaway, I suppose?
No, sure. I'll try and think of a 30-second version. Look, I think the key takeaway is the demand and need for further investment into transport infrastructure remains, it's a critical factor that will need to continue going forward. And so certainly from a transaction perspective, I think we can continue to see it to be a robust market going forward. And increasingly, as the recovery takes shape and the future sort of becomes clearer, we'll see more and more transaction activity. I think there's a huge opportunity for electric vehicles and probably a great need for partnerships across all sectors and different stakeholders in that chain to find solutions that work for everybody and help fund the solution for those who perhaps don't have the capital to put it into action. And I guess also just in general to continue to focus on opportunities to work on decarbonising the transportation infrastructure, which is just gaining more and more momentum as every day and week and month go by.
Okay, great. Thanks very much, David. Tobias, just coming to you for your kind of your views on the opportunities here.
Well, it's difficult to add something because both of the former speakers already brought it to the point. Educate to adapt to the change is a crucial thing, and this includes not only the modes of transport but also the locations. This maybe I would like to stress out a further time, because this will be a key element for the networks in the future, because the demand, and we don't see any chances or the situation where the demand side will be dropping in the near future. So the demand of space will soar for the next years. And how do we fulfill those demands? There are two things, especially finding sites where different site patterns apply further away from the metropolitan areas, but also do not only focus on new plots or new buildings, but look at the existing stock. Often people think about the potential risk of distressed assets, but they are located in the vicinity of those metropolitan areas, so the transport costs will remain as low. And if you invest not such a high amount of capital for example, adding improved lighting systems with a better powering solutions, then those existing stock can have an extended life cycle for further decades. Because what we say, there's a net zero goal for land sealment in place, especially in Europe. So what we have to keep in mind in the future, and this applies to all asset types, we have to build in the stock. And the stock we're now building is a stock of the, in around 2030, 2040, 2050. So that's the two big things to keep in mind.
Okay, great, thank you. And last but not least, Tanja, over to you. You can tell us the investment strategy of Seabury Investment Management, should you wish. But where are we? I suppose where are you seeing the main opportunities at the moment in the market?
Well, I probably would just have a 10-second version because everyone says so many, kind of great things in terms of solutions for the future. But for me, it's like one thing that I think we should always bear in mind is that like all those structural, the megatrends, they're a risk, but also an opportunity. And I think, for instance, we didn't speak about digitalization, for instance, everybody kind of thinks, not too many people are going to come back, flying, or, there's going to be impact on commuters. People think only, I think, in terms of the negatives, but I think digitalization is going to be a huge area of opportunity, smart networks, like I even don't know exactly what's going to emerge, but I think that, the companies will sort of exploit and use those opportunities so at the end of the day it may more than offset the headwinds coming from let's say the virtual environment. So I think that both of those, like decarbonization, digitalization, will be opportunities and risks at the same time.
Great. Really interesting to discuss this and pick up on the transportation area and also how that connects with logistics and then driving into both the real assets and the real estate side. So really interesting to get your thanks very much to everybody. Thanks to all of the speakers, and thanks very much to everybody for joining us. Thank you very much, everyone.